Hello, this is Steve Malone with ComSvex. Hope you're doing well today. And again, some good trades. Taking a look at the euro dollar on a daily chart, we can see that since September, the euro dollar has been in a range from 127 to about the 132 level, up and down. Today we broke the barrier of 131. There is expectations in the market to see 132. Also, there is a triple top setup up here, and what that simply means, for those of you all unfamiliar with a triple top, much like a double top, when you get a triple top, there's a pretty good chance that we look to fade that to sell it back down to a lower level. So I want to talk today about some of the reasons that some market participants are trading long while other market participants are holding short in the euro dollar, looking for the euro dollar to fall back down to about the 128 level. So stuck in this range up and down, what are some of the reasons why the euro dollar continues to push higher? Well, one of the reasons is right off the bat, if we take a look at the weekly chart, the euro dollar this week broke a long-term trend line going from February 2012 through the high that we had in September 2012. The trend line comes in right about that 30.20 to 30.30 level and pushed above it. A close above this, if we close above this week, then market participants are going to look for continuation to the upside. As a matter of fact, we've seen some market flow long the euro dollar, and some of that's coming from central banks who are notable buyers at these elevated levels. Now, some of the reasons why the market is trading long the euro dollar is the German parliament recently approved the Greek bailout. There's optimism on a resolution of the U.S. fiscal cliff. There's been a positive Italian bond auction. Spain did receive a partial bailout from the ECB. And some are having the feeling that the efforts of the ECB are starting to show signs of stability for the Eurozone and the Euro. Now, given that and this upward move, let's consider for the moment that if the Euro continues to move up, where could it potentially move to? Well, my thinking is, based on my experience, prices tend to go back to where it's been before. So in this case, we look at previous highs. So if we look at the high back on September 2012, we can see that it moved up to 31.68. Back here in April of 2012, we can see it was at around 32.80. In March, we had a high point of 33.85, and going all the way back to the high of the year, we had a high here at 34.85. Now, I don't know if it's going to get all the way that high, but some of the reasons I just gave are why the market participants are looking at a push higher, especially if we break the 31.68, the 32 level. If we hold that and continue pushing, then we break the triple top, and what some are going to look at as a potential triple top ends up being an ascending triangle, and in an ascending triangle you look for the market to push higher. So I look for it to push these levels. Also, what you can do is simply go from your swing high to your swing low and see where the market potentially could go to. Let me do it over here. It's easier to see on the daily chart. If we go from this swing high that we had here to this swing low, you can see that there's a push up here to 133.05, the 127.2. The 141 is sitting at 33, let's call it 33.80. And the 1618 comes in at 134.80 a level. So looking back on these levels here, you can see that these highs that we had previously are just about the same as what we have from going from swing high to swing low. So there's some of the targets, if the market continues going long, that you want to make note of. Now, for those in the marketplace who are still holding short, and there are quite a few, some of the reasons why traders are holding short is not only the technical triple top, but given some of the reasons in the marketplace that support a potential short in the euro dollar. There's many market speculators that maintain a risk-averse bias towards the euro given the increased debt to GDP ratio. Just about all the southern European countries have a large debt to GDP ratio. As a matter of fact, many of them, the debt is so high now and increasing at such a rate that it's going to take multiple years for the GDP to overcome that. As a matter of fact, current forecasts suggest that Greece won't have an equitable debt to GDP ratio until 2020. That's 8 years from now. Other countries who were creditor countries have now become debtor countries. So the debt to GDP ratio is a major concern in the marketplace, and it doesn't take much to see the market make a pretty strong fall just based upon the focus of debt to GDP. Also, the euro dollar being a triple top, we're at extreme highs with very low volatility. This suggests efforts in the marketplace to fade to the downside. There's also a rumor of downgrades of European countries. As a matter of fact, today there's a rumor floating around that there could be a downgrade for Germany, which is the backbone of the Eurozone. Another reason for a potential short is the rising unemployment in the Eurozone. The BBC News just reported over the weekend that the Eurozone's unemployment has risen to 11.7 for the whole Eurozone. And in specific countries, youth unemployment is well beyond 25%. And there's also the ever-present potential for the Greece exit from the Eurozone. And according to one report, the euro dollar is within about 1% of a top where institutions and corporates are looking to go heavy short or offers in the marketplace ranging between 131 to 132. The higher up they go, the heavier those offers will be. Be aware that we could have a potential triple top. We see a fade back of about a 23.6. See, we're up here at this 131 area, and a fade back to about 130 level. Make note of this. A fade back to 130. We have a number of bids lined up at the marketplace to buy it back up. The market's just looking for 130 as a new support level to continue pushing higher. If that 130 gives, I expect to see the euro dollar fall back down to about the 128.80 to 128.50 level. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Just be aware of the current events in the euro dollar, and there are those in the market looking to push it higher, as well as those in the market looking for it to fall. With that, y'all make it a great day. Get some good trades. Talk to you next time. Bye-bye.